Robin Newham.
Thanks so much, Jost. And like the previous speaker, I'm very happy to be on stage early in the morning. Ladies and gentlemen, thank you first very much to the ADB for inviting AFI to this forum and for inviting us to moderate this opening session. As many of you know, AFI is a global network of financial regulators and policymakers very committed to achieving financial inclusion through smart policy making. And we've been partnering very closely with ADB for a number of years now, as well as having the Central Bank of the Philippines as one of our founding members. So it's always a privilege and a pleasure to come back here to Manila. Now, in this session, we're going to probe recent developments in technological innovation, of course, how such innovations are actually transforming the lives of the very poorest populations, and also how ecosystem actors can really come together and collaborate and work effectively to achieve the outcomes that we all desire. So to discuss this, I'm grateful to be joined by a really stellar panel who I'm going to introduce to you shortly. But please allow me, first of all, to say just a few words to set the scene. Now, in many ways, I think it's evident to all of us that have been following financial inclusion over the last decade that financial inclusion and technological innovation really go together almost hand in glove. We simply cannot dream of achieving an inclusive financial system for all without taking advantage of the breakthroughs that are there from technological innovation. And that's been evident as far back as the development of M-Pesa in Kenya, the first mobile money scheme 12 years ago now, which allowed unbanked Kenyans through feature phones to make payments and send and receive money securely, and has now allowed access to a full range of credit, saving, insurance, other financial products. We've seen similar mobile money schemes take off across Africa, Asia, and Latin America. But other technological innovations have also proven to be game changers for financial inclusion. We've seen agent banking rollouts that have taken formal financial services into the deepest reaches of the Amazon in Brazil or in Borneo in Malaysia. And we've seen biometric technologies allow more than 1 billion people in India to have a unique identity and actually use that identity for remote opening of bank accounts and other financial services. And there's a lot of innovation in that digital identity space that we've already heard about. But in the story of financial inclusion, equally important as the technological innovation has been the regulatory and the policy innovation that has really met it halfway. In AFI, we've been very privileged to witness some of that policy leadership. More than 50 countries in the world now have established and launched national financial inclusion strategies. A total of 68 countries have set together more than 700 quantified targets for financial inclusion under the framework known as the Maya Declaration. And more than 30 countries now have launched regulatory sandboxes building on those early test and learn approaches of the central banks of Kenya, the Philippines, and others to have formalized mechanisms to encourage innovation in the fintech sector. So that technological innovation and the regulatory innovation have combined to help us get to a point where we've reduced the number of global unbanked to 1.7 billion. As I see our global our graphic designer has already captured on the board behind me. But now we're witnessing an ever faster range of technologies being applied to the design and delivery of financial services, including cloud computing, artificial intelligence, distributed ledger technologies, advanced data analytics, just to name a few. And we're also witnessing an ever-increasing range of players entering into the financial services space, no longer limited to brick-and-mortar institutions like banks and microfinance institutions. We can see fintechs that are emerging, offering greater value and convenience to consumers, ride-hailing companies that are building on the data they have to now offer financial services such as payments and credit to their users. And of course, technology giants such as Ant Financial and Tencent in China that have become the default channels for making digital payments in those markets. But I think in the last couple of years, we're also seeing some changes in how those fintech challenges are perceived. Whereas a few years ago, we may have been talking about fintechs as sort of digital barbarians at the gate, disrupting the established order, and maybe cherry picking the most profitable and least regulated activities. Today, there's a lot less talk about disruption and the end of banks, and a lot more talk about the collaboration possibilities and about developing fintech ecosystems. And in an ecosystem, of course, it's not about competing with other players out of existence, but actually finding a way to collaborate and achieve a healthy equilibrium. So we're going to hear a lot more about that side of things in this session, and the kinds of new cooperation that are taking place between established players and innovators to achieve that goal of financial inclusion. So I'd like now to introduce the panel before me. So firstly, welcome Mr. Kazi Mahmood Sattar, who's a partner at RSA Capital Limited and a board member of BRAC Bank, which has the largest market capitalization in the Bangladesh banking sector. He's also on the board of bKash, as well as formerly CEO of Eastern Bank and chairman of the Association of Bangladesh Bankers. Secondly, I'm delighted to be joined by Pia Bernadette Roman Tayag, head of the Inclusive Finance Advocacy staff at the Central Bank of the Philippines. The BSP is well known for its leadership on financial inclusion and was also recently recognized for its pioneering work in artificial intelligence to develop a consumer complaint system for the central bank. Thirdly, we have Heidi Ektaman Toribio, Managing Director and Global Head for Financial Institutions at Standard Chartered Bank, which has numerous initiatives and partnerships in fintech innovation that we'll hear about shortly. And last but certainly not least, we have a representative of our host, Mr. Sherwin Pu, who is the Principal Investment and Private Sector Specialist in the Private Sector Operations Department of the ADB. So I'm going to go now and join So my first question, actually, it's an open question to all of you. Just like to invite you, if you could set out how you see the development of fintech ecosystems today and what kind of collaborations your own organization is entering into with that goal of financial inclusion in mind. So I think I'll just start to my immediate left, if that's all right, and turn to you, Heidi.
Thank you. Can you hear me? Okay. Well, thanks very much for including me today. I'm really quite honored and excited to be here because I do think that this is an important topic. And, I was encouraged by some of the stats when we start to take a look at this. I mean, I think none of us will think that this is easy work that's in front of us. This is an incredibly challenging set of circumstances that, we have. But I do think that, and when I even think about 5 years ago, the work and the conversation that we were having on this topic, this wasn't coming up, right? So if you just think about 5 years ago versus today, we're in very different spaces. And as a bank, representing the banking industry, if I may, for a little bit, a few years ago, it was all about how banks were being disrupted and everyone was saying, I hope you have your resume together because you'll no longer have a job in a few years. And so we've now moved quite a bit from that conversation into one which has then been more around exploration and understanding what does this new opportunity bring to us, and therefore how can we actually change and transform the way that we bank individuals collectively across various markets. So the work that we've been doing is to move and shift more into a collaborative space and bringing them in. And I would say right now, a lot of it is focused on customizing very specific solutions with a very targeted approach. So that's been really the approach that we've taken initially. And I can talk a little more about those later.
Thanks. We'll come back to you again shortly, Heidi. But next to Sherwin, how is the ADB supporting the development of fintech ecosystem?
Okay, I'm from ADB's private sector operations. As a lot of you may know that ADB has two main windows to support our developing member countries. One is we call public sector operations. That's mainly lend to the government. And I'm in the ADB's private sector operations, so we lend and invest directly to companies' projects. So in terms of ADB support to fintech, I would say that on the public sector side, it's mainly to support government policy, regulations, and maintain the policy dialogues and try to support the ecosystems. And on the private sector side, it's very recent. We are setting up something called ADB Ventures, and now it's getting a lot of traction in the market right now. This is going to be up and running towards the end of this year, beginning next year. It's the first time for ADB to systematically support and invest in startups. Fintech will be one of the four major verticals that ADB Ventures will focus on initially. Hopefully, through this support, we can serve more bottom of the pyramid in the future.
Thanks. And maybe if I can just ask one follow-up to that. You mentioned this is a new venture to invest in the startup. What's the process you're going through to select those that you think can be really sort of game changers when it comes to inclusion?
It's a very good question. Actually, it's going through we call a funnel structure. So currently, ADB Ventures, through its preparation technical assistance, we are partnering with 15 acceleration programs in Asia Pacific. And so last year, in probably from end of 2018 to, let's say, end of Q3 2019, in total, we look into about 2,000 to 3,000 startups. It's not just Asia Pacific, it's worldwide. But we do believe that these technologies or their solutions may have strong potential to provide positive impacts to our DMCs. At the same time, by some instruments, we are supporting some of the startups already, and it's mainly through technical assistance grants. For example, we just signed one grant with a fintech company in Vietnam called Q Global. Some of you may know the name quite well, and it's ERP solution provider to SMEs and has very strong focus on gender. We provide a small grant to them, and we believe that in the next several months after ADB Ventures is up and running, it could be one of the first investments that ADB Ventures are going to make.
Very interesting, thank you. And Pia, now coming to you as the central banker on the panel, how has the BSP tried to respond to the emergence of fintech to support innovation, but in ways, of course, consistent with your mandate as a regulator and a central bank?
Thank you, Robin. First of all, thank you to the ADB, to our hosts, for inviting the Banco Central to be here. ADB is a very strong and active supporter of the BSP's and the Philippines' journey towards financial inclusion. So I think your question, Robin, in terms of our role, and I'd like to link that with your earlier question about collaboration. I think that's really key. The collaboration I will emphasize, of course, is a public-private one as regulator with our regulated entities. And in that relationship, I would highlight three activities. And first is really the mindset, the openness to and flexibility to new things. I think it might be simplistic, but it's actually very fundamental. In the Philippines, we've had banks for over 160 years, and yet if you look at the figures, only 30% are banked. So definitely new solutions, new models, new technologies will have to be used. And it's that first recognition of the potential of new things to address the big exclusion problem is important for a regulator, because that will determine the flexibility that you will have in terms of meeting with new players or old players wanting to do new things. And I think what characterizes this openness is, as you mentioned, our test and learn approach, which is now more popularly called as a sandbox. We started this in the early days of mobile money. We've had about 10 major innovations in that test and learn environment, use of cloud for core banking, as was discussed earlier in the keynote, digital DLT-based store of value, so new things that we are trying to understand. So really the first is that openness and flexibility, and also that will establish a very good communication for us to really understand the risks. So that's where we step in as regulator and fully understand what the risks are, so we're not very heavy-handed on things that do not pose as much risk, and we put commensurate regulations where necessary. And I think that has really characterized our approach to fintech and to innovation. The next kind of collaboration is really on other types of issues beyond our policies and regulation. And this is really on partnerships on financial education and consumer protection. And here we recognize the important role that other private players play in terms of reaching out and delivering these types of messages. And so we really leverage on that. The final collaboration, very briefly, is really now across government, across private sector, and this is where we spearheaded the national strategy for financial inclusion, knowing that some of these issues will definitely cross jurisdictions, especially, fintechs some are regulated by the central bank, some by the Securities and Exchange Commission. There are platforms offering insurance services, so we need the Insurance Commission. So these kinds of inter-regulator coordination, intergovernment coordination, and putting in place a platform where also the private sector can find, the strategic direction of government and can really plug and see where this fits in their whole business strategy. So those are the 3 levels of collaboration that I think the Banco Central is very actively pursuing, as we see that this is both enabling of financial innovation and financial inclusion, but it's also one that assures that it is sustainable and one that protects the interests of the consumers.
Thanks very much, Pia, for breaking down the BSP's approach to collaboration. And I'll come now to Mahmood. And Bangladesh is really perhaps very well known as maybe the first market outside Africa where mobile money really ignited and became a big driver of financial inclusion. How would you characterize the fintech ecosystem in Bangladesh today, and what role do you see public-private partnerships play in taking it forward?
Thank you. Very true, it's not too long that we started this regulation. Mobile money started back in 2010. And since then, there have been a couple of companies of which BCAF has had a phenomenal growth. And the reason of this phenomenal growth that the others didn't catch up, but they did, there were banks which did this company. It's a question of faith and belief of the company itself as to how much they can drive. The government definitely, there has been a private-public partnership in the sense that, in the sense of 11 years back when this current government came to power, 2 terms before, they formed something called A2I, Access to Information, under the Prime Minister's office.
Thanks so much for that. And Heidi, I'd like to come back to you now, if I may. You mentioned that there's been this sort of turning point where fintechs are sort of no longer regarded as just kind of threats to banks' business, but actually we're seeing a lot of collaborations emerge. Can you give any specific examples how you've been doing that and whether it's helped you reach maybe customers that would have been more costly to reach previously? Has it helped you extend into that unbanked or underbanked consumer segment?
Yeah, I think one of the most exciting things that we're working on today is the way that we've changed the way that we've approached connecting with fintechs. So I also run what is called the new payment method segment or fintech segment within the coverage team. So fintechs as clients, but we also have a group that's called SC Ventures, which is also responsible for investing. So they have seed capital and they can create these sandbox environments where they explore new opportunities and ideas that the fintechs might come to us with and say, we have a new approach that we want to be thinking about. But one of the things that we're doing today is called the inclusion economy, and it's something that we've been working on to see how can we create a better system that allows us to support banking individuals as well as institutions in countries where the KYC process is quite onerous. So because the biggest element that we're trying to solve for, I think, and Rama really nicely articulated this, is trust. Right? If we don't have a platform of trust for us all to function off of, we'll be able to solve the in-country applications that we have, specifically. But when you go cross borders, when it gets very complicated and everyone starts to really challenge and say, yeah, well, actually, your standard is not my standard, and therefore, it takes a lot longer to get past it. So one, driving something that's called the inclusion economy and working on how can we partner together with other financial institutions, but also with regulators to see setting an international standard that we can all agree to that will allow us to move funds more rapidly. So that's one aspect. I think another thing that we've been doing is a lot of looking at remittance activities. So I think for a lot of banks, and we talked about the cost-benefit analysis that comes in quite a bit, we are for-profit institutions, so as a result of that, you are held to account to look at how you're deploying capital. But that doesn't mean you have to do everything. So building blocks together with fintech partners that can help you actually bank those individuals, right, that we're not able to, but creating a standard of trust throughout that process. So we've done some work with Ant Financial, in fact, on remittance flows that went from Hong Kong to the Philippines. And this was something that we did roughly a year ago, and the result of this was actually exploring how do you instantaneously transfer those funds back and forth, but getting the KYC right. And we continue to explore this and figure out how and where can we actually apply. But the more we bring in, it's all about bringing in more dialogue and more supporting the connectivity on a broader basis, and including regulators in that conversation, because then you're actually solving for the root cause of what we're all trying. The baseline has to be the same. So education also becomes a really important part of this as well. So as everyone understand the topic that that we're going through as you're going in various countries, I would argue that in some cases they don't. So that's why I think some of the conversations that you had earlier this week was focused on the education component, right? Getting the trust side of it right, and then you have to get the payment and services right in terms of the product offering, so that when you get that combination right, then you actually be able to solve for a lot of the bigger challenges that we have in front of us. So that's the work that we're doing along those parameters.
Thanks so much, and I'd like to build on that maybe by asking a question to the rest of the panel around standards amongst fintechs, because of course